global uncertainty and U.S. President Donald Trump's trade tariffs have affected almost every part of the economy, and that includes the real estate sector. Our next guest says, however, that in Canada's largest city, the sub $2.5 million home segment remains robust. Let's welcome Cailey Heaps, President and CEO at the Heaps Estrin Team, to the show. Cailey, thanks a lot for joining us. How do potential home buyers or sellers react to events like today and headlines like we've been dealing with recently, specifically perhaps the pledge of the action of the U.S. White House to raise tariffs on Canadian steel and aluminum to 50%, and statements from the Bank of Canada today, which at numerous points reference the stop-and-start nature of U.S. tariff policy?
Yes, I think it's a really good question. So certainly the first quarter of 2025, we anticipated a stronger real estate market, but the geopolitical situation and certainly the tariff climate paused the market in a way that we hadn't anticipated. So I would say that we're in a market correction. The market segment that is most active, as you noted, is that sub 2.5 segment of the market. Consumer confidence was certainly challenging in Q1, but we've seen it improve with the change in our leader. And the people who are buying in that sub 2.5 market are typically motivated beyond what's happening in the political climate. The encouraging aspects in that segment of the market is obviously pricing has improved, affordability has improved with the interest rate climate, and there's more options for them to buy.
How are they, you say they're motivated differently than what would be more affluent buyers looking to buy more expensive homes? What are the motivations for that group of homeowners who are looking at a home priced at something less than $2.5 million?
So it's typically lifestyle driven. They want to get into the market. They need to house themselves or their family. Whereas the next segment of the market, called the $2.5 to $7 to $8 million segment of the market, are typically people who are already housed, and they have the ability to wait. And they'll typically only buy if they see a great opportunity in today's market, or if they've been waiting for a specific type of property or inventory that is all of a sudden available. So we're still seeing transactional volume in that segment, but it's gone down. And then the luxury segment, interestingly, call it 8 million plus, I just recently ran some numbers, and the homes that are trading in that segment of the market are trading close to where they were in the peak, call it late 21, early 22. It's just the volume has gone down.
You've noted recently that you are seeing an influx of professionals from the United States into Canada. And I guess when they get here, they start looking for a home. That's interesting. Tell us about that.
Yeah, I've been in this business for over 20 years, and I've never seen such a huge number of cross-border moves, and it's actually going both directions. So we're seeing a large number of both Canadians who want to repatriate and Americans who want to move to Canada. I think that the intellectual capital that's flowing between the two countries is remarkable. The people coming back to Canada are typically motivated by not wanting to be in the US right now because of the leadership. And a huge number of those people work in the medical sector. So I think the intellectual opportunity for growth in Canada is huge. And then the clients that we have who are leaving Canada are typically business owners who are frustrated by the taxation, and they want to set up their businesses in the US, in the more tax favorable states.
That's interesting. Are you hearing this directly in face-to-face or voice-to-voice conversations with people in these positions?
Absolutely. Last week, and I looked at the meetings that we had, collectively on our sales team, and over 40% of them were people who were wanting to move one way or the other. It's a staggering number of people. The
big story today, of course, is the Bank of Canada has stood pat on its benchmark interest rate. Are changes in interest rates as important to would-be home buyers as they were, let's say, a year ago when the benchmark rate at the Bank of Canada was 5%?
Yes, it's a great question. I think there's a huge amount of interest rate fatigue in the market. Buyers are sort of tired of talking about it. They know that it's more affordable now. We understand that housing in general is more affordable in Toronto. So it used to be that interest rates were part of my daily vernacular, and that's definitely changed. Even today, they held. I expected they would hold, but I haven't had any conversations about it beyond you and I right now.
The condominium market is very different than the detached or semi-detached home market because of the ability of developers over recent years to add so much supply to the market. What does the condominium market in this city look like to you?
The condominium market is certainly challenging. I mean, there's so much inventory in the city. There's over 30,000 active listings in the Toronto Real Estate Board right now, which we know brings a larger conversation around the housing crisis when there's that much inventory available. But if we look at the condo market on its own, it's definitely a difficult market. There were a number of things that happened sort of at once that have proved challenging, whether it's the increase in land transfer tax across certain segments of the market. There's a lot of inventory. Obviously, the interest rate environment had an impact. So my feeling is that the condo market will likely stay fairly consistent with what we're seeing now into 2026. What's interesting, though, is just anecdotally, if you're driving in Toronto, there are very few cranes. So if we can play this forward a couple of years, I think there's going to be huge pressure on the condo market and prices will recover quickly.
Do you think all those little tiny units are going to eventually find buyers?
In the right interest rate environment, the investors will come back to market, and that will help with the tiny units. But yes, eventually everything sells. It's just a matter of time.
Cailey, thank you for this conversation. That's Cailey Heaps, President and CEO at the Heaps Estrin Team at Royal LePage.